Shopify stock has been on a crazy good run for the past year or so. We just got earnings. The stock fell after earnings. Even though the results were overall pretty good, there were a couple of things that stood out and a few things that I'm watching super duper closely that I think every investor that owns the stock or is following it should be paying close attention to. I'm Jason Hall. This is Investing Unscripted. Before we dig into the details on Shopify's results and the things that I'm watching closely, we get to make these videos because of our great partnership with The Motley Fool. The Motley Fool sponsors this video. If you're looking for even more great stock ideas, go to our special link. It's right there on the screen, fool.com/unscripted. Go check out that link. You can get access to the Motley Fool's 10 best stocks to buy now. Go check it out. Sign up for one of their services. You'll be glad you did. Before we get into the things that I'm concerned about and that I'm watching most closely, I want to just talk about how good of a business Shopify is. And I'm going to go straight from the press release and the investor letter and talk about those key things. 32% revenue growth, really strong cash flow margins, cash cow business. Here's a look at some key numbers. GMV, gross merchandise volume. This is basically the sales of the merchants on the platform. $92 billion, a 32% increase from just under 70 billion year over year. Monthly recurring revenue. This is revenue on recurring subscriptions. The gross profit dollars were up. That's part of the thing that I'm paying close attention to. It did not grow anywhere near as much as the revenue growth rate did. Operating income was still strong. Again, free cash flow, very, very strong. Accelerating revenue growth, but there are a few things that I'm paying close attention to. Okay, we're going to start with this operating statement because this gets to the heart of a number that I think is really important that investors need to pay close attention to. It's really, really important to know what's going on under the hood of the businesses that you own. So right here with revenues, 32% revenue growth rate. That's fantastic. You love to see that kind of revenue growth, but the best businesses are the ones where you see gross profit often grow at or sometimes even at a higher rate than revenue. But one of the things that we're seeing with Shopify is gross profit dollars are growing at a much slower rate, and its gross margin is actually going backwards. That $1.39 billion in gross profit, that was up 24% in the quarter versus 32% revenue growth. So what's driving that? In short, it's right here. It's the fact that the fastest growing part of its business, Merchant Solutions, is the lower margin part of its business. Now, Merchant Solutions, this is variable revenue. A lot of this is a take rate that's attached to transactions that its merchants do. If you go onto Shopify merchant's website and you buy through Shop Pay or some of the other services that they provide, they're tied to revenue. So those numbers, as long as revenue is going up, those numbers go up. But when revenue goes down, those numbers go down too. But they're also lower margin businesses, right? So I think that's an important thing to understand. And then here's the other one, subscription solutions. Subscription solutions revenue grew 14.6% in the quarter. So this is important because that subscription solutions revenue is more of kind of a direct line to customer growth. Seeing that number grow in the mid-teens, that's good. I don't want to undersell how that is a good number, but this is the most profitable part of its business. And this is one that hopefully we can see the company reaccelerate growth there. Again, I'm not concerned about this, but I think it's important to understand this is how you can see revenue grow 32%, but gross margin dollars only grow in the mid-20s. Okay, so I've moved a little further down the operating statement to the operating expenses because it's important to understand the role that this plays in it too. So we talked about that revenue numbers right here growing 32%, gross margin growing at a slower rate. The good thing is that operating expenses, even though they were higher, they also grew at a slower rate than revenue, about 26% compared to that 32% increase for revenue. That's important because it helps offset some of the weaker gross margin percentage, but you put it all together, and that's why operating income was up 21% in the quarter, growing slower than revenue. Generally, we like to see operating leverage where it grows faster. That didn't happen in the last quarter, but 21% operating income growth, hey, that's great. We're gonna be very, very happy with that. Okay, there's one more data point, one more piece of financial data from Shopify's results that I want to talk about. And this is a thing that looking forward, I'm paying really close attention to because I think it tells us a little bit about what's going on with its customers, and possibly maybe, I don't want to sound like Chicken Little here, but it is something that I'm watching that maybe there's some kind of cracks kind of forming here that we should at least be aware of. So we're right back on that same operating statement. And if we look at this line right here, transaction and loan losses, that number has gone up substantially. It went up $90 million in the quarter. That's a substantial increase in financial losses tied to its credit business and its transactions business. So that's a big jump. I'm going to jump over to their more deep financial statements that they go back a little further in terms of quarterly information. What I wanted to point out is you can see going all the way back to Q4 of 2023, that number has steadily been increasing. And this quarter was by far the largest. So again, I don't want to sound like I'm calling for some big crash or major threat or major risk. But what we're seeing here is something we're seeing largely through a lot of consumer data, and that's more financial losses, more defaults, more loan losses being reported by financial institutions. So again, I don't think it's like a big scary thing, but it's something that I'm really paying a lot of attention to. So those two things, I don't think they create a picture where investors should be fearful, but you got to remember every business that's heavily tied to the consumer economy is going to have great periods. Shopify's having one of those now, but it's also going to have challenging periods. And we are seeing some signs where there are some things that aren't perfect with the business. Investors should just be very conscious of that. I love Shopify. This is one of my largest investments. I'm going to continue to hold it. But I wanted to make investors aware that there are things going on with its financial profile that aren't perfect. And the more you know about those things, the more successful of an investor you can be.